Hello and welcome to the look ahead for Tuesday, the 23rd of April with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we see the focus expected to be very much on Tesla as earnings season ramps up. We've also got numbers from Visa and PepsiCo, among many others. This week in general, we're seeing earnings from the Magnificent Seven. We're seeing earnings from 4 of those 7 companies. We've got Tesla tomorrow. We've also got Meta, Microsoft and Alphabet later in the week. Just as far as macro data is concerned, tomorrow we've also got PMIs from the UK, US and Eurozone, as well as oil inventories. But let's just kick off with Tesla. So Tesla is expected to report after the close, and given the weak deliveries that we saw for Q1, expectations are actually quite low. We saw deliveries, remember, fall around 8.5% year on year. So we're expecting to see EPS come in at 55 cents. That's down from 85 cents in the same period a year earlier and down from 71 cents in the previous quarter. And that's on revenue of 22.73 billion, down from 23.33 billion in the same period a year earlier and 25.17 billion in the previous quarter. Now, I think what's sort of notable here is that despite these price cuts that we've been seeing, demand for Tesla cars has clearly been falling, which is highlighted in those weaker delivery numbers. And that's also as we're seeing increased competition in the sector. In fact, just today, Tesla also announced further price cuts in Germany and in China. Now, the results also come as Tesla's share price has had an absolutely hammering so far this year. Trades down around 40% since the start of the year, vastly underperforming the S&P, which trades around 5% higher year to date. Now, as you can see here, we've seen Tesla has taken out some rather key levels recently. We've seen that it's broken out of that falling trend line, which dates back to November, and it looks to be heading towards that sort of $100 the share level, which was seen right at the start of 2023. Just be careful, the RSI does seem to be getting into a little bit of oversold territory, so that could offer some support in the near term. As far as sort of, support resistance levels to be watching out for, we've got some upside support there, probably around upside resistance around the 150 level to be starting with. And if we get above there, then be watching for around 180 ahead of the $200 the share level. Now, just to continue, we've also, as I said, got Eurozone PMI data. Now, Eurozone PMI, the composite PMI, which is considered a pretty good gauge for business activity, is expected to increase to 50.8. That's up from 50.3. We're expecting to see improvement in both the services sector and the manufacturing. Although the manufacturing is still in contraction, it's just expected to contract at a slower pace. Now, this has been interesting because the euro is under a lot of pressure at the moment, and that's very much as well a dollar strength story. We've seen the dollar rise to fresh 5-month highs. And we've also seen this divergence come out between the ECB and the Fed. We've got the ECB, who's looking to cut rates potentially as soon as June. And yet the Federal Reserve, there are doubts over whether they're even going to be able to cut rates at the end of the summer and towards September, given the strong data that we've seen from the US and given the sticky levels of inflation. Now, obviously, do keep in mind we've got US core PCE out at the end of the week. That is the Fed's preferred gauge for inflation. But right now, that Fed ECB diversion in monetary policy outlook is weighing on the euro US dollar. As far as downside is concerned, watch out for that 106 level. That's the 2024 low that was hit in April. Sellers are going to be looking to take out that in order to test the 105.30 level, which is the March 2023 low. If we do find that the 106 holds, then buyers are going to be looking towards that 107 level. That's the February low, and above there 107.25. But I think broadly speaking, the outlook for this pair is relatively bearish. Also, as far as PMI data is concerned, now we've got the pound US dollar chart here. We've got UK PMI data, which is expected to show that services, the dominant sector in the UK economy, is going to be holding up around the 53 level. That's just down very slightly from 53.1 in March. Now, manufacturing in March unexpectedly returned to growth. So investors are going to be watching that closely to see a confirmation that that's still the case in April. Now, interestingly, the pound as well has come under a lot of pressure recently, and that's because, again, of this Bank of England Fed diversion to monetary policy outlook. We had last week Vice President of Bank of England, David Ramsden, saying that he believes that the inflation is cooling as expected, and that the Bank of England could be cutting interest rates soon. He also suggested that the rate of inflation could remain around the 2% target level from the Bank of England for the next few years, rather than increasing again, which is what the Bank of England had originally been forecasting. Now, his comments come after inflation last week showed that inflation cooled to 3.2%, and after Bank of England Governor Andrew Bailey suggested that inflation is on track for a rate cut later this year. So Bank of England seems to be singing from the same page right now, which is that it does seem that rate cuts are on the cards. The market's fully pricing in the first rate cut in August, with 2 rate cuts expected this year. Now, what does that mean for pound US dollar? It's falling really sharply. It's trading down at 123, around the 120, just above 123 levels at the moment, which is the 2024 low. If the sellers are going to look to take out that 123 level in order to extend losses towards 122.15, and then even potentially down to that 120 level. Just again on that RSI, though, we are seeing a little bit of chance of that going into oversold if it hasn't actually already gone into oversold territory, which could mean we could see a sort of a period of consolidation, at least at this level. Now, what's interesting, whilst we've been looking at the weakness in the pound there, is also to see this strength in the FTSE. You know, the FTSE really missed out on the European and the US surge that we saw sort of at the end of Q4 and beginning of the end of Q4 2023 and the start of Q1 2024, basically because we lack the UK many tech stocks, and that's really what's been driving this rally. But actually, now we're seeing that weakness in the pound. That's really beneficial for all those multinationals on the FTSE. They make up around 80% of the FTSE. That's a more beneficial exchange rate for them, which is pushing the prices higher. Obviously, we've also seen the FTSE, it came within a whisker of its all-time high today, reached up to 8,043. So if we can get above that and 8,049 to the all-time high, fresh all-time highs could be on the card, taking and bringing sort of the 8100 level into focus. On the downside, as far as support is concerned, psychological level at 8,000. And also then we've got below there the 7,940 level. That was the April 2023 high. The RSI does suggest that whilst it's outside of being overbought, that there could be more upside to come. And then just finally, let's take a look here at the Nasdaq, because as I said, you know, we've got earnings season very much in focus, and the Nasdaq got absolutely slammed last week as those rate cut expectations got pushed back for the Federal Reserve. You know, the market's really questioning the Fed's ability to be able to cut rates anytime soon, given the strength of the data that we're seeing in the US and the stickiness of that inflation. We've also had Federal Reserve speakers really coming out and sort of sounding quite hawkish, you know, with no rate cuts. There's no urgency to start cutting rates at all. So as far as levels to watch on the Nasdaq, as we can see, it's really, it dropped 6% last week, falling to a low, taking it below the 100 SMA. And it seems to have found support where we are around just below the 17,000 level. That sort of seems to be a level that we're looking at as a support. Below there, we've got the 16,177. That's the 2024 low, which could come into focus. But that's still some way off. I think, you know, the one to be watching will be the 17,000 level as a support. Then also you've got the 200 SMA there at 16,350 to also keep in mind. As far as on the upside is concerned, watch out for, you've got the 17,165, which is more or less where we are at the moment. That's going to offer a bit of resistance. That's the February low. And then we've also got the 17,451, which is the 100 SMA, which could offer some resistance as well. So I hope you like what you have been watching. If you do, then please do give this video a like and subscribe for more videos like this.